Hello, this is Melissa, the Insurance Exam Queen, and I am so excited to provide you these tutorials to help make sure that you can pass your exam the first time. Please make sure to subscribe to the channel, like the videos, and leave any comments if this has helped you. And you can also find additional support in my Facebook group, and I also sell recorded classes that go more into depth so you can have a full, better understanding to learn and retain the material so that you can pass your exam with ease. Okay, so let's talk about whole life insurance. So whole life insurance can be a little wonky because it's got this thing called cash value, and unless you can understand it, it's just a tricky concept. So this graph represents a whole life policy, and I just realized I forgot to write that it is a $100,000 whole life policy. So what this is saying is that you're buying insurance, and that if you were to die, they will pay you or they pay your family $100,000 if you were to die. Now, what is this cash value and what is happening here? So this chart here represents a whole life policy. And you see there is a line here up the middle. What is happening is that when you are making your premium payment, so let's say your premium payment, and whole life is going to be more expensive than term. Term is temporary and no cash value, and it's the biggest bang for your buck. You're probably going to pay $25 for $100,000 on term, but whole life is a lot more expensive because here's why. So let's say your premium to your whole life policy for $100,000 is going to be $250. And when we say whole life, we mean your whole life, meaning if you were to buy this policy till age 100 or at age 30 or whatever age you buy it at, it will always go till age 100. Now, most people will die before age 100, but if you do happen to live beyond age 100, they will just cash the policy out and pay it to you. So whole life is permanent, meaning you will always get it. You will always get the money as long as the policy is active and you're paying your premium. At whatever point you die or turn age 100, you will get all of the $100,000, unless of course you took out a loan, but you will get all $100,000. It will pay out, with an exception if you took money out of the cash value. That can lower your death benefit, but that's a whole other video. Okay, so whole life insurance. Now, when you pay your premium of $250, about 50 of that is going to go to this side of the graph, which represents money from the insurance company. And about $200 of your payment will go to the bottom half of the graph, which represents cash value. Now, whole life insurance is basically saving your own money for your own death. Whole life insurance is saving your own money for your own death. And just in case you run out of time to do that, just in case you die over here and you've only saved up this much, the insurance will kick in to cover the rest. This is representing $0 to $100,000. So when you pay your premium, 50 of it is going to the cost of insurance to cover you if you haven't saved enough money. And the rest of your premium, about $200 of it, is going into the cash value. Now, every time that you pay a premium payment, it's being split up. Some of it is going towards insurance, some of it is going to cash value. Now, this cash value down here, every time you make a payment, it grows and grows and grows and grows and grows and grows and grows. And it's also earning usually a 2% interest, a pretty small interest amount, but it is generally earning interest. Now you are growing this cash value, growing this cash value, growing this cash value, so that by the time the policy matures or you turn age 100, all the money, because remember, this graph represents $100,000, all the money that is being paid out is your money. It's all your money that you've been saving in the cash value. So whole life is saving your own money for your own death. You're putting $250 to the insurance company. 50 of it is going to pay for the cost of insurance. The other 200 is going into cash value and racking up and saving and racking up and saving and racking up and saving until it reaches $100,000. This is why insurance companies can afford to provide whole life, because when they pay out, most of it ends up being your money if they're paying out somewhere along this side of the graph. Now, the insurance, this is why insurance, some people say, well, why don't I just, if I'm saving my own money for my own death, why don't I just put that money into a bank account and not have an insurance policy to begin with? One, your interest in a regular bank account is going to be taxed by the government. Your interest here will not be taxed by the government if you leave it as a whole life policy. The other benefit about this is, let's say that I were to die. So this is going from age 30 to age 100. If I were to die right here, okay, and let's say that's what, 40 years old? I don't know. If I were to die right here, at this point, I have only saved this much cash value. Maybe that's like $10,000. The other $90,000 will come from the insurance company. So the sooner on the graph that I die, most of the money will be coming from the insurance company, and very little of it will be coming from my cash value. But if I were to die over here at age like 80 or 90, whatever that is, the graph is not necessarily equal, but if I were to die over here, this much of my money, this much is coming from my money, and only a little bit is coming from the insurance company. And if I go to all the way 100, it's fully funded with my money. So the reason that we do whole life insurance instead of just a bank account is because if we die before we have the opportunity to finish saving the money we want to save for our death, for our family, the insurance will kick in the rest of what we're missing. And that's where part of your premium payment is going towards, paying for the cost of insurance. So a whole life policy is saving your own money for your own death. And if you don't get to do that on time, the insurance company will kick in and will pay the rest of the money that you haven't saved yet. So at any point that you die along this line, so if I were to die right here, this much cash value, so maybe that's like 60,000, and then I'll get the other 40,000 from the insurance company for a total of 100,000. So you're saving your own money for your own death, and if you die before you have the opportunity to finish that, the insurance kicks in and pays the rest for the full 100,000. And that's the basics of a whole life policy. Now there are a couple of things to talk about. Cash value, this is your money. You can actually borrow it. You can use it. The only thing though is if you take money out of here and then you die, they're going to reduce your death benefit by however much you took out for a loan. Okay. And we'll have to do some more videos on that to kind of show you how that works. And then the other thing, what else is super important here about what happens if you no longer want this policy? What's going to happen to your interest? What's going to happen to the money? What's going to happen? That's all called non-forfeiture options. And that'll be a whole other video, non-forfeiture options. What do we do if we no longer want this policy? Let's say I bought it when I'm 30, and then when I'm 50, I decide my marker stopped working. When I'm 50, I don't want it anymore. What are my options? And that's called non-forfeiture options. And that'll be a whole other video. But this is a quick rundown of whole life insurance, understanding that you're saving your own money for your own death in the cash value. If you die before you have the opportunity to finish doing that at age 100, the insurance company will kick in to pay the rest. And it will go your whole life. It will, as long as you keep this policy, as long as you pay this premium, it will go to age 100 and you will get all of this money upon your death. So quick rundown of a whole life policy. This is the insurance exam queen sending you all the love and all the vibes for you to pass your exam. And again, make sure you join my Facebook group for more support. I do sell tickets to live classes, and you can always buy past class recordings where we go more in depth to make sure you understand, retain the information so you can pass your exam with ease. I'm sending you all the loves and all the vibes for you to pass your exam. Have a fabulous day.